What's up, everyone? Today was a pretty opportunity-filled day in the markets. In today's video, we're going to cover all the important things that happened today and some important setups and some predictions for the market tomorrow. We have a lot of exciting opportunities right in front of us right now. Lots of ways to capitalize off of this market's movement. So you better stick with us all the way to the end. But Tom, looking at the market today, we saw another bloodbath, another just fade down almost all day long. What is going on in this market, and what do we need to know?
Yeah, I mean, some people are going to be happy today, right? A lot of the people who are kind of bears in this type of market, or the people who adapted and played puts today, are probably pretty happy. But I will say the call buyers down here are probably a little bit upset, unless you caught some pretty good scalps today, which if you did, good trading. But that S&P took a big tumble to the downside. And Mike, we've talked about this 444 support for a while now. Now, last week it actually fell just under there, right around 443.50. Today, we saw a perfect touchdown there early on in the morning, and then later in the day, the S&P actually fell under this level, and this is actually a big spot. If we go on that 1 hour chart and we scroll back a little bit, it hit here at the beginning of July and at the middle of June. So there's definitely a big area here that's starting to break down, and we're seeing these big tech stocks start to float to the downside. Like I said, some people are going to be happy with it, some people are going to be sad. Tesla was one of those tech stocks that had a big tumble. Apple, Microsoft, and other stocks like that followed down as well.
Exactly. So as a lot of people have known this, Tom and I have been relatively bearish over the past couple of weeks, and I've been reading some of your guys' comments, and you guys have been really capitalizing off of this downside movement. And I'll tell you, Tom, this change of trend, this change of price action has made for some beautiful opportunities. And to further go deeper into the trend we're seeing right now, we have a special chart for you guys in today's video showing some option volume and some significant changes of options volume over the past couple of weeks. So we'll zoom in and we'll look at the top chart first. Basically what we're seeing right now is a giant increase in the put to call volume ratio. That is pretty big because when we see swings to the upside, it shows that the market just gets more and more bearish, and it's just easier for stocks to continue down in a somewhat violent way, unfortunately, or fortunately, depending on how you play it. Now, if we scroll down a little bit, what we can also see is the total net call volume falling off of a cliff. Literally. It's kind of scary. But anyways, basically what we could see on the chart is the call volume minus the put volume. So when we see giant drops, it shows that, there's a lot more puts being traded than calls. And what's very interesting is the change that we're seeing right now is a very rapid drop. We have not seen a change this big since the beginning of the year. In the beginning of the year, we saw a giant change from like super deep in the negative to pretty high in the positive, which basically means, in the beginning of the year, everyone was trading puts, and then they rapidly switched to calls. And guess what happened from the beginning of the year to right now? The market popped up in a pretty big way for obviously months at a time. But if we go back to that same chart right now showing the volume, we can see a rapid drop in the positive now going negative. So now we are just seeing more put volume than call volume. This is not something you see very often. And the last time we saw a move this big, it meant something.
Yeah, it really did. There's a lot of drops here on this chart. I'm surprised how many of these big swings that we've seen over the past couple years, but it actually makes sense because what happened during 2022? We saw the market pretty much sell off throughout that whole entire year. Now, of course, there was big swings like we see here on the chart too, but it was mainly to the downside, and we saw that put volume start to really come in. So if we see this put volume continue to kind of take control here, and then obviously that call volume just keeps shriveling away, it's not going to be good for the market. And I like both of these charts, Mike. It's very interesting, and you can even see in 2022 up here, on the top chart, how it was much higher, obviously, with the puts whenever we had all that downwards movement. We're starting to get back up into those same exact levels. So it's very important to look at right now, especially with stocks being so overextended. And it's just been such a good move up this year that I think it's just about time that we're having a big pullback. And I know a lot of people are going to be surprised by this, but it's just the ebbs and flows with the market. It's not overly surprising to see a pullback like this. It's not like we're really crashing and burning either. It's just a normal movement, in my opinion.
Exactly. And the biggest thing is being able to adapt. If you can't adapt to this market, I promise you won't survive. So make sure you're adaptable, and every day is a new day, and you just have to be able to change with the market. And the past couple of weeks, we've seen a lot of changes. And what's actually interesting is we haven't had too much bullish great news lately. Like just the other week, we saw Fitch downgrade the US credit rating, and then today Fitch also had some extra bearish news where it basically warned everyone that it might downgrade a bunch of banks, including some of the powerhouse banks like JP Morgan. So that wasn't good either. It's just another bearish news article that you just don't want to see, right? But we are seeing it, and that's why you have to adapt. And, I'll tell you, a lot of the opportunities have really been to the bearish side of things, Tom, whether that be puts or inverse ETFs or anything like that.
Yeah, and I'll say with that news with Fitch today, those banks took a huge tumble, and I know the bots did very, very well. It was awesome to see JP Morgan and Bank of America plays with the bots with that crazy news coming through, and those options ended up exploding. But look at those moves down. Bank of America was down 3.2%. Their average move down over the past year has been 1.2% to the downside and only 1% to the upside. So they had 3x their normal move there on that big drop. And even last week, they were starting to fall off a little bit. It's, towards Friday there, end of day, and then into Monday, that was just a terrible drop. So we're definitely seeing these banks fall a little bit more. Citigroup, if we go out to a daily chart, I've been watching a big wedge with them. They're actually starting to fall down under that in a big way. So I'll be watching that $40 support as we go forward with Citi. But it's weird to see these banks starting to fall off, Mike. A lot of people argue that as we start to see rates, for example, like the U.S. 10-year bonds start to go up, that we actually start to see, more buying pressure into banks. The stocks would move higher. They're getting more revenue, but it looks like the stocks are definitely starting to fall as these yields are moving higher.
No doubt about that. And, if you guys are looking for the best way to capitalize off of this recent market movement, you got to check out our bots. It's that first link in the description in the comments down below. We had two awesome plays today. The first one was with JP Morgan put options. They went from $135 all the way up to $259. Then we had another one with Bank of America put options that went from $45 all the way up to $71. The bots did the hard work of finding the plays, and I know a bunch of people capitalize off them in an awesome way. So if you want to get access to these bots every single day, as well as some swing trades, other custom tools, screeners, big money, hedge fund trades, and a bunch of other great tools and software, and basically everything else you could need for short-term trading, check out that first link in the description in the comments down below. You can cancel it anytime, and it is the best program for short-term traders. But Tom, back to the video. For this week, while it's not necessarily the biggest earnings or economic schedule week out there, we still do have some fun events. So fill us in.
Yeah, the FOMC minutes report is coming out tomorrow, and that's going to be pretty big. It's just going to kind of highlight what the Feds were talking about at the last meeting. And I think that this is going to be very big here because the percentages are still showing that we're going to be pausing into the end of next year, but there's a little bit of a percentage towards a rate hike, especially at the November meeting. So I'm going to really watch these minutes and watch those percentages for the November and September meetings. If those hike percentages start to go up a little bit, I'll definitely be looking at that, and we'll talk about it a little bit more tomorrow as well. So be tuned in for it tomorrow night, but it's going to be a pretty big event, 2 p.m. Eastern time tomorrow afternoon. It's probably going to move the markets a little bit. Like I said, it's going to give us more insight on those rate hikes.
Yeah, so extra volatility is coming our way tomorrow, 2 p.m. Eastern time. Make sure to tune into the markets around then. And then, Tom, for the earnings side of things, we still do have a couple fun reports on the schedule.
Yeah, we do. So tomorrow before open, we have Target in the morning, even JD, a nice China stock there, Tencent as well, TCEHY. That one's an outlier. They can have some crazy moves. So keep your eyes on them. And then Cisco and after hours. Thursday, we're going to have Walmart, and then in after hours Thursday, Applied Material. Friday, we have XPEV and John Deere, but it's not the biggest week for earnings, Mike. I'm definitely looking more into those minutes here.
Alrighty, Tom. Well, it is now time to get into the fun stuff, the predictions and setups for tomorrow. One stock I'm watching very closely is JP Morgan, the potential downgrade stock. Basically, with JP Morgan, bears are really in control of this stock right now. Banks have been relatively weak in the short term anyways, and I can definitely see this stock pulling back more. It is, it's pulling back in a decent way with some higher than average volume too. I would not be surprised, Tom, if we saw a test of around like 145.50 to 146, depending on how market movement goes. It could potentially even get worse. Like I said, depending on the news and stuff. But either way, I'm watching JP Morgan to the downside.
Yeah, I mean, those are some good supports down there. I like those targets of like 145. That's definitely a big area. So I'll keep an eye on the banks too. I think they could keep falling. That Fitch downgrade is definitely going to be a scary thing to see. And, talking about the Fitch downgrade, a lot of these banks are also in the S&P. And I'm watching the SPY, I'm watching the DIA today, and they started falling down a little bit more. Like if we look at QQQ over the past couple weeks, like they're not actually breaking the low of this week yet. Whereas SPY, for example, just broke below that big support. So I'm watching SPXS to the downside as long as SPY keeps going down tomorrow. We have to watch for rejection off that 444 resistance now, and then watch for moves a little bit lower. These will be more day trades that you'll have to feel out, but look at this move today, up 3.4% as the SPY fell, and you can take advantage of a lot of those options. So watch SPXS to the upside. If you want to have a level for SPY to break below tomorrow, maybe watch 442 and then target 440 under that. But I'll just kind of feel it out here. I'm really watching for that hit off that resistance, like I said.
All right, sounds good. Another stock I'm watching is UVXY. So this stock pops to the upside when everyone's freaking out and panicking in the market. Basically, if the market's selling off in a decent way, you can bet that this thing is exploding. So it popped up by 9% today. And if we continue to see the same level of price action and momentum in the market tomorrow and throughout the rest of the week that we saw today, this thing has a lot of potential. So I'm going to be hawking this one pretty closely.
Yeah, it'll be fun. It follows that VIX up, and I'll definitely be watching it. I'm looking for these stocks to pop up pretty good here, especially as that volatility increases. We've been waiting for it to pop up for a while, Mike. Like if we go to VIX on the daily, it's been down in the dumps, honestly, for a while. So we need it to get back up there. Hell, Mike, imagine if it came. You know how everybody always has that thing with the VIX? They're like, once it gets to 28 to 30, that's always where you want to start buying stocks, right? Maybe we'll get back up to there. I don't know if we'll get that high, but that would be pretty wild if we did somehow retest that. But with my next play, I'm going with Boeing to the downside here. So I was looking at Boeing to the upside as it started to break out here. But I noticed recently after this breakout, we've been starting to see a lot of bearish activity here. And just with the market falling, I think Boeing could take a pretty big hit in the short term. So if they go down below 231 and then 230, I'll be watching for puts over the next couple days. I think this is a huge support here, and there could be a lot of selling pressure. Like whenever you zoom out, Boeing is so overextended here over the past 6 months.
No doubt. Alrighty, Tom. Well, it's now time for those momentum plays, and with the first one, we have AI to the downside.
AI, yeah, terrible move today. If they break under 31.50, go ahead and look at puts just under the low of the week.
All right, with the next one, we have Boeing. Sorry, Tom, we stole your play, but also to the downside.
Yeah, so if you're really looking to scalp this for a day trade, I gave like 230 and 231. If you want to look below the low of day today at 231.50, I think that you could have a good scalp down to 230 and then use 230 as a bit of support. But I think we could go even lower than that. So those are kind of the levels I'm looking at. Like I said, 231.50 first and then 230 after.
All right, and then with the last one, we have Microsoft for both directions.
Yeah, Microsoft has been wild here. There's a big support coming up around 320. If we break under there, I'll eye up those puts. But if we end up breaking above 323, just between this middle range here, then I'll look at some calls.
Alrighty, so we have that upside level for calls for Microsoft, we have the downside level for puts, and then jumping back to Boeing and AI, we have the downside levels on those ones as well for put options. But it is now time for the big money $1.7 million trade of the day, and we are looking at the bank stock, Bank of America. Basically, someone plowed $1.7 million into the Bank of America 30 strike put options that expire on November 17th of 2023. Basically, this is a trade betting that Bank of America will fall. The lower it goes, the more millions this trader will make. I like the setup, Tom. Obviously, as we talked about earlier in the video, there is some negative news in the banking industry right now. Also, Bank of America is making lower highs. And overall, I just think it's a pretty decent setup. And I'll tell you this, I'll be watching Bank of America to the downside pretty closely. I will also say that I do like Citigroup for the long term, and I think it's a great dividend stock. So I hope the banking stocks don't fall too much, but in the short term, it's hard to say that bears are not in control right now of these bank stocks.
Yeah, exactly. And I know a lot of, like I talked about earlier, Mike, like a lot of people talk about like credit tightening and stuff like that. Maybe this is even a play on that, as credit starts tightening and we just see that continue to hit the economy, maybe less people are going to be getting loans and stuff like that. So I'm very curious here to see how these banks do over the next few months, to see how they react. And I'm very curious also to see how the Federal Reserve reacts to this inflation starting to uptick a little bit more again. Like we're actually looking at the next CPI reading, it's actually supposed to come in a little bit higher again. So I'm very curious here. I think it's a good play. I like the strike being 30. It's just at the money. So looking good there. And I will say what I also love is that there's a couple months time here. It's not like that this has to go down tomorrow, but I would think that, they're maybe looking for like a drop down into October. And obviously September is like historically the worst month in the market. So maybe they're even making a play on that.
Yeah, we shall see. But either way, tomorrow should be a pretty opportunity-filled day, whether you're looking at these crazy bank stocks or even if you're looking at the overall market. Today was, I wouldn't say a total bloodbath, but hey, it was pretty volatile, and we definitely saw that momentum increase. And when we see momentum increase, that is like the best present, the best gift you can get as a short-term trader, because that's where a lot of the opportunity lies. So even if today wasn't your day, that's okay. Keep your head up high. Tomorrow's a new day, and I think we are set for a lot of good opportunities and moves in the market over the next couple days. I'm pretty excited, especially given the FOMC minutes report tomorrow as well. And Tom, I just have a feeling this week's going to be a great one.
Yeah, me too. So far, I've really enjoyed the price action. The bots, they didn't do too well yesterday, but the bot plays today were fantastic. I mean, those were awesome there with JP Morgan and Bank of America, and even going back to last week, like the bots just had some amazing plays like on Nvidia and BABA. So I've really been liking this volatility picking up. It's been great for options trading, and that's the best thing, right? And if you guys haven't been doing well, check out the link down below. Check out Discord. It's free to join. Join up for free. Check out the discussion channel. A lot of traders trading in there. The day trading channel, there's even some free plays every once in a while too. So check out those if you're new to it. But yeah, it's going to be a fun time over the next few weeks.
There we go. If you guys are watching the videos, but you're not subscribed, you're missing out. Destroy that subscribe button. When you do, you'll see our videos recommended to you more often. We take hours worth of research, editing, and recording, and try to combine it into a nice, easy to watch 20-minute video. So subscribe up, join the community. You won't regret it. Besides that, guys, let's have an amazing day in the markets tomorrow.